As we begin May 2025, we have seen a stock market and cryptocurrency recovery after large drops, making investors panic that the stock market will continue to fall during 2025. 2024 was a great year to purchase and trim AI stocks, and I believe 2025 will still be a good year, although there will be a lot more volatility this year, mainly due to a new US president causing chaos within the markets. Welcome to my channel where you can watch my AI stocks, cryptocurrency, wealth building investment strategies, and how I use these to beat inflation. At the end of the video, I'll give my thoughts on how I intend to take advantage of any investment opportunities this month. Investors borrow using the Japanese yen at low interest rates and then convert these funds into other currencies, such as the dollar, to buy higher yielding assets such as US stocks and benefit from the difference. For example, borrowing the yen at 0.5% and then investing in US 10-year Treasury notes at 4.5%, profiting from the difference. The yen carry trade tends to be associated with periods of market euphoria to market panic. Currently, the trade is estimated to be around 4.5 trillion. When the carry trade goes into reverse, investors sell the high-yielding assets due to the rise in Japanese interest rates and then converting them back from dollars into yen to pay back the debt borrowed. Thus, US asset prices and the dollar will fall. The more the yen goes up, the higher the US Treasury yields will go, to the point where they'll reach a level that investors are prepared to keep invested, which looks like it's going to be 5%. It will be tough for the US stock market to rise whilst the 10-year Treasury note continues to rise towards 5%, which may sound like a shock due to the Treasury note dropping to 3.9% recently in response to falling stock prices. However, since then it's experienced a sharp reversal higher. US yields are heading higher, which has forced President Trump to do a reversal in some of his tariffs, hoping to stop investors selling US Treasury notes into Japanese bonds, which I don't think this will happen. The 10-year US Treasury note will head towards 5%, which will make it hard for the stocks to push higher. We need a weaker yen, and a US Treasury note topping out at 5% to be a sign that the carry trade is being used again, and thus lift the S&P towards an all-time high. The US budget deficit as a percentage of GDP since 2008 and more recently 2020 has been increasing at an alarming rate. The US government has been borrowing money to spend, resulting in higher interest payments and increasing the debt further, which will worsen in the incoming recession. Thus, higher inflation and tax cuts putting pressure on the bond market, which will demand even higher yields. The only solution to the Fed money printing is to monetize the debt and artificially drive long-term interest rates down, or risk the bond market collapsing due to the mountain of debt, though this does mean even higher inflation for a longer period, certainly for the rest of this decade, probably well into the next decade. This chart shows the current US debt to GDP, where it is starting to creep back up after initially dropping back in 2022. Even the Congressional Budget Office are projecting US debt to GDP rising to 175%, although I think the actual reality will be far worse, probably over 200% of GDP. The continual devaluation of fiat currencies is going to continue, likely accelerate. What we have seen so far is nothing to what's coming around the corner. Unfortunately, when the US debt mountain passes 100% of GDP, interest payments start getting out of control, and new debt needs to be issued to pay the interest on the existing debt as the money printing machine gets out of control. The last thing I want to be invested in is assets such as cash or bonds, and instead invest in inflation-proof assets such as great AI stocks or cryptocurrency. The stock market is in a holding phase, waiting for some good news, such as a resolution to the trade war, which should allow Trump's his tax cuts of as much as $4 trillion that will send both the deficit and economy soaring. This, however, will be short-lived, as the tariffs won't work. Instead, the supply will dry up and inflation will take off. This will probably crash the US bond market, dollar, and stocks will crash as well, possibly as much as 50%. Trump's tax cuts will only really benefit the rich, companies and the top 1%, whilst everyone else will see a small increase in their income, though the tariffs will force these consumers to pay extra, taking any increase in their income. The net effect will be higher inflation, higher debt and deficit, which won't help the stock and bond markets. The US is heading for a recession. How deep? I'm not sure, and probably won't know until after the event. The US could even be heading for a stagflation, which is much harder to recover from than regular recessions, which tend to be deflationary. The signs that I'll be looking out for will be rising prices, rising unemployment, and a falling dollar. Subscribe to my channel and watch how I navigate my investments during this turbulent time. My aim is to maintain exposure to the AI megatrend, which will mean preparing myself for the next bear market, with the objective not to sell all of my AI stocks and then attempt to buy back at the lowest price, as I'll only know how low the market will go with the benefit of hindsight. Recent AI stock price action illustrates how the financial media focuses on the wrong events. The media are always in search of fear stories. It is just a case of whether the stock price will react to the media hysteria. After the Trump tariffs, the next major stock market event will be the yen carry trade in the coming months, when Japan's increased inflation will prompt them to increase interest rates again. In the age of inflation and AI, the risk is to the upside, and thus I'll be focusing my portfolio and not get carried away with fear in the dips or even market crashes, which will be temporary. I mentioned in my March update that we were in for a volatile first few months of the Trump presidency, with multiple stock market shocks, which any one of them could send the stocks sharply lower, and I have been proven right. Looking at the VIX chart can show us that the initial spike during March and then an even bigger spike during April. With the VIX still at around 20, the market still is not stable yet. Ideally, the VIX needs to trend towards sub 20, which will then help the bull market resume. Thus, it is essential to keep maintaining exposure despite all the fear from financial media companies. This is why I do not read or watch any financial media press or TV channels, as they always advise the incorrect strategy for the financial markets. Their primary focus is to sell fear and panic so to maximize their own exposure and profits. Another comment by President Trump could easily take the S&P down towards 4,800, which would be another great opportunity to buy the dip again, which I think is the likely event. Thus, I've continued to use my unique take on dollar cost averaging strategy to accumulate positions. By using my buy targets and the company's earning potential as a guide to which AI stock looks great, my primary focus is to accumulate great AI stocks during any corrections. And later in the video, I'll show you which AI stocks I've been able to purchase during the last month. I'm not a financial advisor, and this is not financial advice. This is purely what I intend to do. AI stocks previously broke out to trade to overvalued levels, which since then have entered a period of consolidation as they've unwound their overvalued states before the next breakout higher. As I'm aware of this behavior, I tend to trim AI stocks that have become overvalued, for there are only two ways a stock evaluation can improve. The stock price falls, earnings play catch up while the stock price consolidates in the trading range. Next, I'll give a brief comment on why I've continued to invest in the following AI stocks. After this, I'll show you my buy targets of these AI stocks, what my average price paid, and my asset exposure. Before I intend to make any asset purchase, I determine firstly how much risk or exposure I wish to have. This aids my unique take on dollar cost averaging by having an investment price target for each stock I wish to accumulate into. To learn more about this, watch my video, Wealth Building Dollar Cost Averaging. After selling some assets outside my AI stock portfolio, this has allowed my investment portfolio to stand at 77% invested with 23% left in cash, ready for any investment opportunities. My investment in Nvidia has gone from 80% back in January to 140%, and likely will go higher still on any signs of market weakness. Taking full advantage to purchase this great AI stock at deep discounts from its all-time high. This is what investors need to take on board. Be positioned for either rising or falling prices. As I mentioned in my October-November update, I expect Nvidia to reach $240 plus by the end of 2025. Therefore, I'll be careful of over-trimming Nvidia, as this stock does not give many corrections to build a great position in. Nvidia has experienced fantastic earnings growth since 2023, from an EPS of 11 cents to 89 cents by 2024, an increase of over 700% within 2 years. Its future EPS growth looks great as well, which should mean the stock trading at over $180. This would be a 10x increase when the share price was trading at $16 during 2023. Earlier this year, I said that Google was on course to trade above $200, which it did. Since Trump's tariffs, it has dropped below $145, showing great support at around $150, which means the downside should be limited, whilst the upside is that Google can reach $200 again. Thus, I've increased my exposure to 96% as the stock price is laying the groundwork for this next target of $240. It is a steady AI stock and not volatile like AMD or Nvidia. Thus, I'm unlikely to be trimming my exposure until much nearer the bear market. I expected it to announce an earnings beat, which it did, and it's made its stock price look even cheaper, especially against other AI stocks, which should result in its share price climbing even higher, above $200. During this correction, AMD has dropped briefly below my buy target of $88, and I've been using my unique take on dollar cost averaging to build a bigger position, taking my exposure to 170%. This I will trim as the market rebounds to enable me to reduce the exposure towards 100%. AMD's earnings haven't been great as the other AI stocks. However, I do believe this will start to change as we progress through 2025. AMD seems to be trying to find a floor to the share price drop. Once this is complete, I believe it will start to rise above $160, which will give me an opportunity to trim my exposure. During this market weakness, I've taken advantage of accumulating into Microsoft slowly to increase my exposure to this steady-as-you-go stock. I do expect it to rebound above $450. However, I am unlikely to be trimming much. Earnings growth has been steady, and I believe it won't change for the future. Its cloud computing is bringing in strong revenue and earnings growth. The stock price has dropped since its high of $468, which I believe by the end of 2025 it will surpass this towards $500. Meta is another stock which has been hard to increase my exposure into. As an AI stock, it is expensive. During this correction, I've been lucky enough to increase my exposure by purchasing the stock for under $500. I will look to trim it later in the year when I expect the stock to trade above $640. Since November 2022, Meta has a spectacular bull run, and the reason for this can be seen in its high earnings growth. It consistently tends to beat earnings estimates, as Meta, like Nvidia, is AI. I like Taiwan semiconductor manufacturing, as they will soon be updating on the next AI chips, which will mean no slowdown in demand as data centers continue to consume compute power, where TSMC cannot produce enough high-end chips to meet demand. The stock did drop below my buy target, which I could not resist but to purchase some more, increasing my exposure to 64%. The downside looks limited, whilst I believe the stock will rise towards $190, allowing me to trim again. AI stock chip demand still strong and accelerating, so exposure to semiconductor companies like this is key to my investment strategy. This company has excellent revenue and earnings, which is growing at the rate of 20% per year, which should last the next 5 years. I believe it will give an earnings beat, which should allow the stock price to increase. I have been repurchasing Qualcomm stock during this market correction, as the stock price dropped towards my buy target of $152. This stock is beginning to look cheap against the other AI stocks, and I will look to trim as it rebounds towards $170. It is looking fair price now, and its earnings growth is great, suggesting any correction in this stock will be temporary. I'm using any dip below $152 as an opportunity to accumulate more. Since the beginning of the year, Tesla has suffered an expected spectacular collapse off its $488 high, trading down to near $200. I was only surprised that it did not fall below $200, given its overvaluation. The valuations are still very high, especially when compared to the likes of the other AI stocks. I strongly believe these are going to drop the stock price even more, probably below $150, maybe even $100. It is with this view that I have decided to sell all my remaining shares and will begin to repurchase them when the stock price drops more. My long-term view is still that I expect Tesla stock over the next 10 years to increase to at least $1,000. However, Tesla is a high-risk stock which can be volatile. This, timed correctly, can give an opportunity to build a bigger position. The earnings report was terrible. This was already showing in its price to earnings, which has been overvalued. Thus, a lot of the growth was already within the price, and the market discounts the future. Tesla is ready for a drop, regardless of what future earnings will say. ASML stock price is like what it was during 2022, though its price to earnings remains fair valued, so not dirt cheap, but neither expensive, as it was when it was trading above $1,000. Its earnings growth looks strong, so I expect it to trade towards $800, which I will look to trim at. This correction has allowed the stock to reach my buy target, allowing me to use my unique take on dollar cost averaging to build a bigger position within this stock. With my January update, I expected it to have a good reaction to the earnings report at the end of January, which it did, surging above $750 and still looks on course to head above $800 during 2025. Over the course of 2024, Micron soared to $156 and the correction taking it down below $90. This stock is volatile, which I look to capitalize on. Any drop towards or below $70 I've been accumulating into and will be trimming down my exposure once the market rebounds, as I expect it to trade towards $100. Micron's earnings have been affected by the AI chip demand, therefore the stock price should move higher. Maybe not above $150 anytime soon, though the earnings growth does look good for 2025, which should mean the stock rising above $100. This table shows my buy target for each AI stock and what my current average purchase price has been for the stock, and what my current exposure is of the asset. It is a balancing act between having too much exposure and overpaying for an AI stock. The easiest thing to do would be just invest and forget. I can't do that for stocks such as AMD. It is too volatile not to try and capitalize on this, which is why I buy in and out of AMD depending on what the stock price does, whilst building a core position, as I believe, regardless of what stock prices do, the AI megatrend is going to run for decades. While Bitcoin was going down, the price of gold was going up, demonstrating that Bitcoin is no digital gold. It is simply a risky asset and not to be used as a safe haven. In my January update, I believed we'll get a fresh Bitcoin high, which we did, to around $109,000. I believe there will be another high during May and then a final high towards the end of 2025. However, I still believe that the cryptocurrency is nothing more than a gamble, so my strategy will be to sell 70% during the high of May, which I'm expecting Bitcoin to reach over $120,000, and wait and see what the rest of the year brings. This will enable me to be more focused, as most of the profits will be banked, and if Bitcoin moves towards $150,000 or $200,000, I'll still have some Bitcoin that I bought back at the end of 2023 for an average price of $37,000. With the Bitcoin bull market coming into its final year, I'm already preparing myself for the next cryptocurrency bear market. This strategy is still in progress, but I plan to begin small purchases at 40% below the all-time high, accumulating more as it drops, as the bear market is likely to last a year. At this moment, I'm not 100% sure if Bitcoin will drop 80% of its high due to the ETF Bitcoin funds. It is more likely to drop by a maximum amount of 50%. And lastly, do not forget that we're still in a bull market, which means when AI stocks fall, it's time to get greedy, not fearful. Thank you for watching. If you found this video helpful, don't forget to like, subscribe and hit the notification bell for more tips on how I use AI stocks and cryptocurrency to build my wealth and beat inflation. Until next time, take care.